Okay, now it's picking up that it's got my microphone. Test, test, test. Anybody got me? Can anybody hear me? It's working now? Yeah, I'm not sure why the OBS had me on a default setting, not my Bose headset, so I'm not sure. All right. So what I was saying earlier, if you are on YouTube, if you don't mind typing in on YouTube, that way I know that you're there and people are seeing it. Am I echoing now? Shoot. Again, I'm gonna run through this fairly quick. I did have this up earlier. We're at the lower band, the lower white bands. So there's a chance I get an alert where we get a mean reversion trade, which if we're underneath the band, the mean reversion would be a long. And it's take us back up to the ADMA pretty close. So it'd be back up to 414 and it'd be back up to 59.93 half. For the ITG members, y'all know we had the purple and orange lines. I showed y'all this afternoon, the final 15 minutes of the day. We didn't hit it in after hours. As soon as Globex opened, we popped the 350 lows, and we immediately went purple to orange. And then, again, one of the better trades was right at Globex open, and it happened, right here at 1800. If you look through and you can see what we did, we sold off after the close, and it was just a matter of us getting long. If this goes off, I will. If I get an alert and I catch it, I'll jump into a trade. I don't have tick strike on. I didn't want that feedback loop. So let's jump into PVI. First and foremost, just real quick. These are the levels this week. Now, 60, 70, again, Monday's down day. As we started lower Monday morning, we got tons of premium. We talked about buying call debit spreads at weekly supply. Those are clearly in the money. We never touch, again, this is SPX. We never touch weekly demand. And like last week, we barely touched weekly demand. The week before, we didn't touch it. When you're above weekly supply, guys, we are long Alpha Foxtrot, right? We are playing long calls, call debit spreads, and we're selling puts. Typical rule on PVI, we got $9 for selling these Monday morning in the drawdown. They went further, but we got $9. In the event this was a normal week and we closed above PVI on Monday, and we spent all day above Tuesday, above it, open, high, low, close. Look, if you got to go split hairs to see if SPX touch weekly demand, to me, you don't roll the PVI. Now, can you? Sure. But again, statistically is everything to me. People talk, people can constructively or be critical, pick PVI apart. Again, there's no hard, fast rules. There's guidelines. Typically, if we have an open, high, low, close on Tuesday, we would roll up the puts. Why didn't I? Because Monday, ES on Monday, we were below weekly demand, right? So here we are below weekly demand on Monday. Again, we're not, we closed above it, and then what did we do? Early yesterday morning, we closed down, we wicked down to weekly demand. So ES and NQ were different, right? Because ES is continuous contract. We don't have a gap. SPX, we got a gap. So I didn't roll PVI this week. But again, when you're getting $8, $9 premium to sell these things that got a 98% win rate, don't be greedy, right? Hogs get slaughtered. You know the drill. On the flip side, what did we do for income? We got call debit spreads sitting right here at 58.05, 58.10, 5 wide, and those seem to be absolutely in the money. I will tell you tomorrow morning, if we do not burst out of the opening drive to the upside, there's a good chance I will close those call debit spreads. I don't know that we're going back to 58.05. I don't think we will, but I wouldn't. If you're horny to sell more premium, let's see if I got another one. Never sell above weekly S2 unless your call side's getting squeezed. But weekly S2 is right here at 57.25. I think some of the members were asking about it today. Let me go to workshop just to make sure I can answer those questions to AR. And I apologize, guys. We had not really an emergency, but we had a last minute run where I had to rush to, I had to go to FedEx and drop some stuff off. So I just had to push this back an hour. I knew I was going to be late. All right, so again, if you look at these levels, where are we? We're above weekly at R3. And then we have the gap. Again, SPX has a gap. Now, one thing that we did is we get in the gap fills, but you guys can understand, because ES violated the weekly supply demand, we didn't stay above it all day Tuesday and close above it. Wednesday, we wouldn't have rolled the put side up because of ES. And then if you go back to that SPX, I'm not going to split hairs, man. That wick is right on weekly supply. When in doubt, man, sit it out. You don't need the premium. You know, maybe you only get 95% this year instead of 96 or 98.7. Tough shit, man. Tough titties. I mean, seriously, it's just not worth it. Now as we roll from ECS or ES up to SPX, just real quick. Oh, this is on the 4 hour. Real quick on the daily. Keep an eye on where we are on ES. Again, gravity points are up here. We got our higher time frame supply zone, our higher time frame demand zone, and another demand zone down here. If we'd failed it, and we didn't. This is the 100-day moving average, and this is the 50 is red, white, blue. Are they stacked? Red, white, blue? Yes, they are. So we're still looking for potential longs. Sorry, Chief. You can't laugh at my jokes. I don't mean to be crude on YouTube. So now what do we got? Again, everyone in the world, and I sent a tweet out on this earlier. Guys, from October 30th, we had an island reversal, right? Where we gap down and then we gap back up. This gap needed to be filled. And again, so what did we do? We just erased the last basically 2.5 months of upside to go fill this gap. Now, the other thing that's important about just the election gap is, we talked about it Sunday night. We're expecting the market to drop 5%. Once the market dropped beyond 5%, which it did on Monday, and then we got back to that 5% line, and we drew it, and that 5% line was 57.94. So we said 57.94. What we didn't have Sunday night when we did our workshop, we didn't have our weekly supply. So 57.94.95. Weekly supply is 58.04. Somewhere in this 10-point range, you're going to want to play long. And if you did, from the gap up Tuesday, right, we gapped open here, wicked all the way down, right back down to weekly supply, there was your buy zone, right? We've already filled the gap, so the gap's not here anymore. We already hit the 5% drop from all-time highs, which I told y'all, as a former portfolio manager, former hedge fund guy, typically on a retracement, you're waiting for that 5%. It don't mean we're not going to 7, 8, and 10, but 5% is a big one. You're going to start to liquidate some assets, or you're going to start to accumulate some assets again. It's what we talked about from December. Folks were building cash. So we checked the box on the election gap. We checked the box on 5%. And damned if we didn't come back and retest weekly supply right here. Guys, I know our Discord has made more money this week in the last 3 days, or 2 days, 2.5 days, than they did probably in any month, any single month all last year. I mean, you want to talk about a start to the new year. This week has been a start to the new year. Why? We sold premiums down here at PVI. We got long calls, call debit spreads right here at weekly supply. And again, those that know me, when we hit R3, which we gapped over R3, weekly R3 today, this is where I typically close my call debit spreads, but we gapped above it. So as soon as we get back to weekly R3, if we get back below 5,900 tomorrow, I will sell my call debit spreads. I don't care if they're worth 325, 368, or 365, or 415, whatever it is. Again, it's blind. It's free money, right? $1.25. Now, we didn't buy the call debit or the put debit spreads. We didn't buy them. And the reason why is we wanted to wait for Monday to play out. But we did sell PVI way down yonder. And so now if you look at the market, where are we? Well, we're in the upper half of the range. And there's many of us that still have, again, I got to go back to that chart. There's many of us that still have a call sitting at 58.90, right? On SPX. This was the model we talked about. Call debit spreads in here. And this would be your 10th, right? Here's our 59.45. Where did we run to today? 59.60. Where did we close? Right back down here at 59.45. Why did we close back down here? Because of these two twin towers sitting here at 60.20 and 59.50. And we closed. And so, again, there was so much open interest here. Market makers and dealers, they didn't want to close above this and pay those calls. So what they do, they bled the calls down, and when the calls outweigh the puts, they're going to close it just underneath it so they don't have to pay out. And they were pretty damn methodical today in Power Hour. Now, I thought after Power Hour, after they reversed it, then we'd spike back up towards 50, 60, towards this zone. And after hours, we didn't. When did we do it? Globex. But it's all good. So we're playing calls, again, that were cheap. Matter of fact, the 59.75 calls on, was it Monday? At Monday morning, they were going for 15 cents. And now I don't even know what they're marking. I hadn't even looked, but they're going to be over $1, well over $1 from 15 cents. You just, again, now we're gonna make money off the put side, the most money off puts that we've made in months. We're gonna make money off the call debit spread, and we're gonna make money off the long calls. That again, there was no premium up here. So why buy a 5 wide up here for 5 cents when you can go way down here? Again, last week's supply, even though we hit it, usually the best weeks, some weeks, are to take the previous week's weekly supply that we didn't hit, and you want to put on a debit spread there. Now, these were even weeks, right? Lateral, lateral, lateral. So what do we have? This is balance. And then what happened? We had an impulse move down. And the impulse moved down. Now we've got a virgin weekly demand. I'm not putting on a put debit spread to go down here. Not yet. Because the market is making another, we balanced, we impulsed, and now we're making another impulse. Well, where do you think it's going to go to? Probably 60-15, 60-20. So then let's get back into the models, the SPX model. I don't know why it's lagging. So we check the box, check the box, check the box. And then, again, just another chart. I just threw my charts. They're all, the system's set to record off one screen. I don't know why it's laggy. So above weekly supply, we crossed through the 100. We went right to this 50-day moving average. and also the orange dots are the 21 EMA. 50 simple, 21 EMA, and we stalled. Now, this point, a couple things of note. First thing is, what happened to our Momo? What happened to our Momo this week? Right? We talked about it Sunday night. We were right here. We were oversold on the weekly, but the daily was correcting and showing a sell signal. So what happened? Monday, we were green, and we opened way down here on a gap down. And we were still green here, and you can see the blue and the white line. The oscillator was starting to turn, and it turned like a banshee warrior right there on Tuesday, even though we spiked down. But that turn on Tuesday and oversold on the weekly, and now technically oversold on the daily, and we're right down to weekly supply. I mean, at some point you gotta put the ante in. This is about the best ante you could put in the market. So we sold PVI puts, we got call debit spreads here, and we got long calls under 6,000 that are naked, and they're making the most money. And so this is how you can sometimes read the tea leaves like we did Sunday night, and this is how a normal 6,000 week can turn into a $60,000 week. And then the last but not least is looking up here at our gravity points. And I want to zoom in on the gravity points a little bit, because we no longer, on the daily, we're no longer Alpha Bravo Charlie. Now, all of them were right here. The bottom one was right here on Sunday night. Now, Alpha A is coming downward. Still a positive slope, but now we've got gravity points moving down. So we can start to see, as the gravity points are being affected, they're being affected by that swing low, that swing lower low, this swing lower low. And when they start crossing over and you got A under B under C, at some point A will turn negative. And if A starts turning negative, you got a high, you got a lower high, you got a lower high, you got a lower high. Are we going to get a lower high this week or not? I don't even know. But everybody's all excited about us getting back up here to 6,100. And I would say watch out, because this gap right here might very well get filled. So we'll have a new line that we're going to draw from top wick up to flat bottom green day. And at some point, the market's going to come back and fill this gap. And it typically is going to happen when we get a reversal in our gravity points, or we start to see the oversold condition. I'm willing to bet tomorrow, if we get above 59.60, you're going to see the weekly oversold disappear, and the daily is going to be pushing up here towards an overbought condition. And in the event that we get to the gravity points, there's a good chance the daily is going to be up here overbought. And again, we have some alpha that the rest of retail obviously doesn't have with our gravity points. But again, just to help us kind of see through the tea leaves. Again, nothing different here. We're just looking at that channel. This channel goes all the way back to 2022. The fall of 22. And again, we're right on it. We're holding it. Are we going to come back and retest it? Maybe. Don't know. None of my business yet. Ooh, so we see we got back inside the thing. You see this long? This is how I trade it. 398 right up to the ADMA. 398.46. If it's less than 10 points, I wouldn't take that trade on NQ. You really want 10 points. You really want 12 to 13 points in ETH, because this happens. And again, if it's not 10 points there, can I safely expect to get risk out of a trade for 3 to 4 points? A profit taker at 6 to 7 points, and then another profit taker at like 12 to 13 points. If it's just not there, I'm not taking that trade. But I kind of had a feeling once we got below it. Again, ES, we got back down to it. You take 91 up to the 8, or up to that blue line. It's pretty much the ADMA. It's close. But again, 91 90.75 or 91 up to 92.75. So again, 2 points on ES might be worth it. I really like 10 to 12 points on NQ, and if there's not enough runway there, I don't personally trade it. All right, so we got PVI. Again, I don't know this week. I'm gonna be honest. I don't know if I'm gonna sell and turn this 59.75. I don't know if I'm going to turn the 59.75s into a debit spread. Now, it'd be a ghetto spread, right? I would sell above it for a massive credit because I only paid 17 cents for them. I'm probably just going to close them out. I don't think I'm going to sell call credit spreads here until Friday, and it will be 0 DT based off of Nick and Case's ranges. And I really want to see what transpires tomorrow. Okay, so that's PVI. That's market structure. Where are we going to probably go? You know, we're going to come back and fill this gap. Non-ITG guys, just, again, a gap is just a box. The previous high wick to the bottom. We're here. I gap everything in orange just so I can glance at it and see where it is. I don't need the midpoint on the gap. I don't need a midline here, and the election gap is done. So I'll drag the election gap back. I don't need to see it. And I don't need anything in the background. So it's just there. Everybody talked about it, and again, my big thing to Twitter is, you know, everybody was expecting the bounce, but not everybody profited from the bounce. And again, if you don't make money, I don't give a damn how smart you are. If you're broke, you're broke. Right? It does you no good. There is no medal, there's no trophy for the smartest broke guy in the world. The trophy is the dumbass that has got millions. But everybody, especially on Twitter, they want to be the smartest guy. They want everybody to respect them. What the hell is that? When is the last time you cashed in respect to pay your mortgage or buy a new vehicle or take a vacation? I mean, shit, I'm good looking, but I ain't got no free vacation off my looks. I mean, come on. That's supposedly a joke, but nobody's laughing in ITG, so fuck them. All right. Why is it not taking off my midline? There. I don't want a midline in my gap. But we do have a gap here, so annotate it somehow, some way. However you do you. Bro, where is my shade? Background. Man, struggling tonight. And I just want it so it stands out. Okay, that's it. That's all we got right now for market structure, SPX. And now let's talk about what could be the gem for tomorrow and the rest of the week. And I'm just going to move this up and we'll just talk about it. Now, over the course of the week, I changed the delta. And now we're going to 30 delta on Thursdays. TDT, 30 delta Thursdays. And then Friday, we're going to do straight 50 deltas for guys to be able to trade. Market is closed on Monday, yes. So we run these every night. I run them every night. Here's the model. Again, the snapshot date is not today. Why are we doing that? I need to rerun it. 30 delta. Let me export it real quick on another screen and see if I got to change it. 130. Yeah, shit. I gotta change them. Hang on, folks. This is what I was doing. Right, my wife brought me dinner. So check this. I'm gonna do it live in front of everyone, and don't even care. Honey badger. The colors aren't going to be even, so we'll change them as need be. I was like, man, it's too good to be true. And yes, it is. All right, half of 135 is, anybody? 67. So we're looking under 67. Now we got to go up here. I got to get my... Everything's got to be under 67 or it's white. Man, I knew we had too many blues. Too good to be true. All right, 194. 135, 135. We should be red on these two. Oh, y'all are too funny. 190. Again, Goldman, CAT, Goldman, CVX, XOM. Home Depot and Lowe's are all compared against SPY. 38.38, we're good. 135, 137 is still white, but man, barely. Again, if you're looking at Home Depot and Lowe's, folks over here, they're like, well, I'm going to trade, I'm going to trade whichever one's got more favorable premium. The premium to me, the price is second. What matters the most is value. Where's the value on this ticker? And again, Broadcom right here, 132 versus 135. Snowflake right here at 131. Again, ServiceNow is now at 515. So again, tomorrow, you look at ServiceNow, 515. You look at ASML at 525. ASML is a $745 stock. ServiceNow is a $1,000 stock. Do you want 480 or do you want 513? Well, you got a lot more risk selling the ServiceNow because it's 513 premium on a $1,000 stock if you're selling calls naked versus 481 on a 745. That's why that PVI tells you all those ratios are done for you. So it's plug and play. If we open up tomorrow red, guess what you sell the shit out of? ASML calls. ASML calls. Netflix is more expensive than ASML, but the premiums are less than ASML, and PVI is a whole hell of a lot less than ASML. So that's just the process. So we got to be aware. 67. So Oracle's white. I have to do this every morning. You'd think technology would be able to figure out if it's 50% of that number, but it don't work. 173 is orange, 72 is white. So there's the call side, done. Put side, 155. What's half of 155? There is OHT, but it don't work. Come on, half of 155. Anybody? Sheesh. You guys suck at math. Okay, these two are under 155. If it's even, Microsoft is even on the put side with Qs. If it's even with it, you always color it orange. Why? Because what has more risk? An individual stock or an index? The index. Now, if an individual stock is half of 155, I know, 177. If it was half of it, I give it blue anyways because that's just going to show you where the value is. There's tremendous value there. 133 is white. 192 is, again, 192 against 149 is orange. Oh, here's an interesting one. This could be a bad print. But typically, you don't see Chevron and ExxonMobil split like this. Right? So now you got ExxonMobil orange on the put side. This could be a bad data print. Typically, they're both blue, or one's blue and one's white. Sometimes you'll get one white and one orange, but that could be a bad data print. And again, you just got to go through, and that's why you always got to check options. This is a comparison tool based off today's closing prices. No, I did it, Nanya. I'm just trying to converse, man, so it's not a one-side thing. I do it in my head all the time. 79 is not half or white. 77 is not half because it's 149. And now we're back to Oracle. 77 is half of 155. That's my cutoff. White, red, white. Yeah, blame it on Rick. I'm kidding. I can't throw him under the bus. Double 155 and you're 310. So that's still orange, but at the upper end of orange. This is blue. This is white. This is white. And this is orange. Yeah, YouTube stream we colored for 10 minutes. All right, so now if you look at it, not nearly as sexy as it was before I updated it. And I'm glad I went back and showed you guys that. But again, NVIDIA, if the market starts moving tomorrow, NVIDIA, AMD are still blue. So despite their big move today, they're still blue, meaning they have twice the value per unit of risk that QQQ has. Okay. CVX and ExxonMobil, we have to check that. They don't have earnings, so I'm not sure what's transpired there. And then Lam Research is the next one that is extremely cheap, but it's also one of the lower strike prices, share prices. And then you got Super Microcomputer down here. If you want to trade a $32.50 and a $30 strangle, again, I would expect Super Micro to move, 5 to 10 points if the market moves. And so again, if everything's quiet at 9:30 at the open, you look for long strangles. Super Micro, Lam Research. I would probably do Chevron instead of Exxon with that till I knew what was going on with that data print. AMD, again, we've got the 120 calls on AMD from today. And again, when markets open and they're red, they're giving you that entry. It started at 124, I think, on Monday night for Monday's market. And then NVIDIA, again, 139 should be a slam dunk. Where did NVIDIA close at today? 136. I would not sell these puts. Again, I'm not 100% convinced that the market's climbing. So on this, you look at it, and let's say the market starts green tomorrow. Again, immediately go and look at ASML and Snowflake, or actually, it's ServiceNow, not Snowflake. I apologize. But you go and look at these, and ASML is going to give you a higher PVI, and it's a lower strike price. So you're going to get paid higher, more value to sell, and less risk. So again, one ASML put, if the market's green tomorrow, are you going to get 580? No, you might only get 420. Who cares? Again, this is telling you where the most excessive put premium is. If you want to be a naked put seller, OHT, that's hilarious. Yeah, blue has tremendous value, Tony. Thank you for that. Again, they're down here at the bottom. Blue, 2 times the value. It's trading at a deep discount. Again, what you guys look at, and again, not bashing you, Rocky. You only know what you know, right? We all started somewhere. But if you went and looked and you saw Amazon and Google, and you saw this and you're like, holy shit, I can buy Amazon calls for $1.20, or I can buy Google calls for 60 cents. Well, Google's trading at twice the value. They're half the premium, right? That's what you see when you look at price. Then you come over here to the right, and PVI says, well, Google ain't twice the value of Amazon. Amazon actually has got more value than the price is reflecting. Or Google doesn't have as much premium, or they don't have enough premium for their value. So you just get into the one where you go over here and look over here, and on the put side, Google's actually lower in value than Amazon. And so now you're talking 80 cents on the put, 65. So when you look at that, the Google calls are cheaper, but the Amazon puts are cheaper. And PVI is a lot closer here. And so again, the computer, the math behind it, which is what I can't share, that's the genius, not me. I mean, again, I'm just showing you guys the math has been done for you. We just kind of plug and play and say, okay, this is where the math is. Like, do I want to trade, an 80-cent Apple or an 82-cent NVIDIA? So I look right. Well, NVIDIA's got a lot more value relative to Apple and the QQQ than Apple does. So even though you're controlling for the same premium, you're controlling a much lower strike, there's still more value in the option. And that deals with implied volatility, single stock volatility, historical volatility, and over a half dozen different ratios of the volatility component for each individual ticker, and comparing and contrasting that volatility and all those ratios to the index ETF. So that's why it's a comparison tool. This does not mean that if you looked at a chart, it would tell you that NVIDIA's chart's getting ready to break out and Apple's already broke out. That has nothing to do with technical analysis here or fundamental analysis. All this is telling you is where the option is priced on the chain, and then we're running that premium and the strike price same. That's why the deltas need to be the same or similar. We're running all that into the computer and then looking at all the iterations of their various different volatility components. So once you scrub Greeks and price and call strike, then you now scrub it through, you run it through a volatility interface, and then that's what kicks out our PVI. And again, that just tells me pure value index. It's just pure value relative to the index. And this is how I ran the hedge fund. And literally, this all I did was spreadsheets. And I traded off the spreadsheets. So again, we'll see. We'll see tomorrow what we've got. But again, I'll post this. I'll post this tonight on Reddit as well. I need to go back and repost it in ITG. Anybody got any questions? Anybody got any questions? Okay, Rocky. Delta is two things. Delta itself, and again, this is kind of entry-level stuff, but Delta is just telling you a 1% move in the underlying index, right? This call strike, this strike price right here, if the index goes up 1 point, this strike price is going to move basically 32 cents. Max, we don't have a free trial. We discount the first month down to 99. The reason we don't is there's so much proprietary stuff that gets shared when people join. The scripts, but the time, and there's so much stuff that's in here that I can't possibly, there's no IP, there's no way to protect it. Okay, and so, wait, Rocky, because there's another component of Delta that people don't really understand, but it's really dumbed down, is this is the percent that strike price, SPY strike price, will be at the money at expiration on Friday. So, if we go 30 Delta, that is a 30% chance that those options are going to be at the money on Friday's expiration. Theta deals with the amount of time value decay. And how much the option's going to decay over the course of time. And theta becomes important. I wish there was a good example of a, you know what? Let me do this. I can probably make this work. It's hard because it can't. You know what? Let me highlight it. Let me see if I can highlight these two. And again, I don't mind. There's not much else to cover, so I'd rather kind of teach a little bit. Let's get to these. These are the important ones. Okay, so if you look at Home Depot and Lowe's, they are what we call sister stocks. And so sister stocks they're in the same industry, they're relatively close, and they typically are going to trade together. Okay? So Home Depot's got a much higher strike price than Lowe's. So you look at the delta, and I'm not crazy about this number. But we hypothetically have got to say, well, let's put those, and let's imagine that those deltas are the exact same, which means they have the same amount of risk, and they have the same probability of being at the money at expiration, which means they also have the same probability of being out of the money at expiration. This is not the case here, but we're going to make it the case, hypothetically speaking. Then you go over here to theta, okay? And because Home Depot has much higher premiums, right? $1.21 relative to 55 cents. And PVI is substantially higher, right? Almost double. So what you could do is you could sell a Home Depot call, 410 call, for $1.21. So that's $2.42. Well, that's $1.41. Let's sell one, $1.21. And let's go long to Home Depot's or Lowe's at 55. I'm on the wrong damn. Tell you what, it's been a long day. God, we've had so much fun today. Again, guys, I'm going to tell you, if you would have joined us Sunday night, your whole year is paid for. And you still have an extra $2,500 in your pocket. Let's do 2 times 55 cents, and let's sell this, and let's get $1.10. Let's buy this. So now, if you sell this, you're minus 15 or minus 30 delta. Oh, you didn't do that. If you sell this, if you buy these, you're plus, what the truck, man? Does that make sense? Oh, you got to be kidding me. Let's take out the parentheses. So if you buy 2 deltas, you got to be freaking kidding me. I do not want an equal. Thank you. So in this case, if you traded this right here, because the PVI is almost 2-to-1 on sister stocks, you sold one contract and got $1.21. You turn around and with that $1.21, you bought 2 of the lower PVI share. So you got 2 55-cent calls. That's going to cost you $1.10. So in this case, you're going to have 11-cent credit. But you also got a 30 delta advantage. Now then you look at theta, and this theta on this puppy is going to come off 62 cents tomorrow. Well, the theta on these two are going to come off 64 cents tomorrow, right? Per day, pretty much. Why 64? Because 32, but we bought 2 of them. Then you go over to this side and you do the same thing. You go 124. I'm going to sell one at 124. This is assuming the deltas are even. They're not even. So there's higher math that's got to go. But you sell one at 124, and that's 30 delta. This one, you're buying two at 83, so we're paying, what, 166? But we're getting a 60 delta. Now you got a debit here, though. Okay? So, again, the math just won't work tomorrow. But usually, sometimes it does. It doesn't always. So you got a 42-cent debit. You still got a 30 delta. We'll call it credit. In your favor. What happens is sometimes you can get these pairs trade, a long-short trade on sister stocks, where you can get a credit on the call side and the put side, and a credit on the delta side, to where you basically have mitigated your risk all the way down to the only thing that could happen is the CEO of Lowe's is caught in a scandal. Don't do it, POTUS. He's got them. They're colored. They're just not the right colors. All the time. I don't know why. 135. It looks right. When I export it to Excel, it for some reason goes foobar. So it's conditionally here. And this is what, again, for ITG, at some point in the next quarter, we're going to be able to give this to you guys so that you guys can actually log into this via the website. But it's got to be web-based. And again, we're doing it at the end of the day so that we don't have 500 people doing, 15. I know Nunya would have like 150 API calls every freaking day. We can't pay for all those IP calls, API calls. Where was my OPM? So anyways, that's the ball. That's basically how it works. When the deltas are even, sometimes you get a higher theta with a higher PVI. And when the theta is in your favor, this might still work because you're at 60. No, it won't. Because your long call, the theta on your long, on lows, is going to be 80. So 80 is going to be much higher than your 64. Sometimes it works though. And it's rare that it does, but if it does, I usually post it on Twitter. So there's a track record there because it's like probably a 97, 99% probability trade. Like you almost cannot lose. Now, obviously there's headline risk when you start dealing with a single stock. But you can do the same thing here that you can go through and you could sell. Again, I would sell ASML. I get 480. So let's clear all this out. And this might happen tomorrow. This could happen tomorrow. Let's go ASML and sell 480. So we got $4.80 to work with, right? And we are now a negative 30 delta for 2 days. So you got to have the portfolio to be able to take assignment or go long ASML if it gets above 745. So if you're trading one contract, that's 100 shares. So that's 75 grand you got to have in your portfolio. If you don't have it, this is just in your strategy. But for the big dogs, you got it. Now let's say you sell that. So you get $480. What do you do with your 480? First thing I would do is I'd go look at the blues. And I go get me an NVIDIA and maybe an Apple. Apple's expensive and it's white. Why is it rounding up? Freak, man. This chart is all jacked up. 77, AMD. Again, Chevron, ExxonMobil have nothing to do with ASML. Lam Research, another 61 cents. $0.61. Well, have we gotten anywhere close to $4.80? Nope. All right. So let's see. What else? Let's do it. Let's punch in a Google, right? Google is, let's start doing the whites that are low cost. Google 60 cents here. So we're at what? $1.60, $2.20, $2.90, say $3. We're at $3.60. Now we've got a total of $3.60 from $4.80. We got $1.20 in premium credit. Right? We got $120 credit. How much delta do we have? 30, 40, 30, 60, 90, 120. We got 150 delta versus a short 30 delta. I'm going to tell y'all right now, if ASML runs to 745, I'll trade the stock. Do you know how much money these contracts will be worth if ASML goes at the money? And the reason why is you're leveraging a 30 delta short and you got 5 times the buying power and exposure to a long market. Crazy part about it is you could do it on the put side too. Is you go 580 on the put side. And then you just start bridging them down. So now you got 580 and 480. Now we got 1060. We got $1,060 that we get to disperse along the option pricing model, and Apple's trading at 66 cents. Nvidia puts are at 90 cents. Google puts are at 80 cents. Amazon's the cheaper put, right? So throw Amazon in there, 0.65. Get down, always do AMD because they're cheap. And all you're doing is you're buying discounted exposure. That's it. We want exposure in the market, but we want discounted exposure. Lam Research is 64 cents. And so add it up. 65 and 65 is 130 and 170. So now we're at $3, $3.60, or yeah, $3, $3.70, $4.40. So now we got $1.40 credit here too. So now you literally, and now we got one more over here. So now we got 180 delta. Are you guys seeing the power? So you get paid literally $2.60, $260 to sell one ASML strangle and use most of the premium to buy Amazon, Google, Apple, Nvidia, AMD, and Lam Research. 5 or 6 to 1 ratio. And you're getting paid for it. I mean, that's free leverage in the market. Now, if ASML, say they were Microsoft or Meta, and the ruling came down and it was favorable, then yeah, they might go gangbusters. And so you do got to be aware of news events when you're trading this. But if you're willing to put 75K on the line here and short this, you have to have the ability to cover the trade so you don't get in trouble. But putting 75K on the line to turn around and generate this kind of premium, that's nothing. I mean, that's an additive to, say, PVI. And I know I didn't explain it real well, and I apologize, but it's, again, I didn't plan this. This is from the cuff. Oh, shoot, they're white. They're almost orange. That's why I was looking at it. Does that make sense? And the only reason ASML is there is because the option premiums are super expensive. Now, if flip over and people are like, well, I heard Meta's got, a ruling coming out. Let's say I wanted to play calls and puts, a strangle for Meta for next week because it's going to move big when the ruling gets disseminated or announced. Well, the best way to do it is if they're red, is you just tell yourself, if an option is red on the PVI, the only way I'm going to trade it long is through a debit spread. So I might go here. I might go 625s, 630s. And that way, I'm not paying that excessive premium because you can mitigate the excess premium by selling overvalued calls too. Now, you're still going to pay more than what you would normally pay for, say, a 5-wide on an individual ticker. Because this is what tells you how much a 5-wide is going to cost you. The lower the PVI, the cheaper the 5-wide credit spread is going to be. Or debit spread. But again, typically if you're selling credit, you want to sell wide. And if you're buying debit, you want to buy tight. If you're trading indie stocks, that's on the indexes. If you're trading indie stocks, you want to buy value, right? We want to buy blue and white. And we want to try to sell red and orange. And that's just option pricing model. In a nutshell. I'm not going to save this, so that's already saved, I guess. All right, anybody got any questions? Anybody need help? Anything? Let me know. I'm here. Rocky, Theta is just time value. And again, if you're, hey, offshore, good to see you. If you're long a call, if you're long an option, there's a Theta derivative, and this is telling you how fast that option premium is going to come off against you, right? Options have a time component, not a, again, you need to get on YouTube and go watch videos on option trading. There's a lot of basic stuff that you need to, you're going to need to get that dialogue. Again, not that we don't talk through it. We just typically don't spend a lot of money, a lot of time trying to teach people the basics. We are going to get into some more of the basic stuff. I'll do some live streams on data events like this morning. We traded live stream and how ITG knew, that the CPI print was great, but there were certain technical indicators that kind of gave us the green light that said we need to get long, stay long for today. And those people that got long at 8:30, 8:35, they made just an enormous amount of money today. Anybody got any questions? ITG guys? Anybody else on Twitter or YouTube? Yeah, POTUS, somebody's got to do that for me. I can't. I'm not. Definitely not tonight. I'll screw up that whole spreadsheet. Anybody? Anybody? Test, test, test. I posted the PVI trades. I am missing one post that went. One trade that got executed. We sold, jokingly, we sold the 5400s. Again, this was Monday. We bought 5490s, $4. We sold the 5590s for $8.90. That was a 5 wide. I covered the one. I set a cover overnight. I covered it at 790 for that 1 point, a profit on one contract that created a back ratio. I was long 5, short 4. And then the next morning, Monday, again, times here Eastern, times here are Mountain Standard. Again, I scalped one. I sold at 720. I bought it back an hour later at 510. So again, another $2.10 credit. And then later on that day, I just sold the 5400s. We talked about it. The 5400s were 200 points under, almost 200 points under PVI, and they sold for over $2. There's no risk of assignment on futures. I meant it's cash equivalent, but it's cash settled. But in the event that you are short ES and you're short, if you're short ES options, then you'll get assigned an ES contract, which is why we talk about, the whole process and learning how to wheel. Yeah, POTUS. Yeah, and you're asking. I mean, you might as well reach your hand in the garbage disposal and flip the damn switch. I ain't screwing with any formatting tonight. I'll do it on the weekend. I'll do it this weekend. And for some reason, it's when I convert it over. I export the data. If you sell a put, you don't want the price to go down. You want the price to stay even or go higher. If you sell a call, you want the price to stay even or go lower. If you sell at the money, if you sell out of the money, you just don't want the price to get above that strike price, or you are now in the hole. Because that means somebody wants the option at the strike price. You got to give them the stock at the strike price, not wherever it went to. So you become in the money if the option goes up, if the stock goes up, or the underlying, the security. I hadn't taught basic option seminar since I think the last option seminar I did was 1998. We just usually talk and stream like this, and something comes up and we start looking at the what ifs and creating the if then statements. And again, we're still looking for, again, I would expect us to push I don't know if we're going to get 60-20, but boy, they're going to make a run at 6,000 if we don't fill the gap. So tomorrow morning, we're going to see how the market opens. We're either going to work back down and fill this gap to go higher, back to the gravity points, or we're going to push up. And if we push anything above 60-20, SPX, I would tell you that's probably going to be a short. I don't do the whole sheet. I just do the section, but yeah. I just paste the data. And I was trying to do that to get rid of the... we can do this offline, man. We don't need to... go through tonight. But I was trying to do it to get rid of the formulas. Because these formula bars, they don't exist. Because when I go to paste it, I paste it, I paste it just the data itself. So it doesn't it shouldn't change any of the coloring, but it does. All right. PVI is, yep, Tony knows. Again, we got some great people in here in our group. guys, again, for those that are joined Twitter that are not members, the best thing you could do is get active in Reddit. And I'm not saying that so our Reddit account. Again, it's, hell, y'all want to go and get active on Twitter and engage more on Twitter. I could probably get paid on Twitter. I don't care about that. It's just having a community that I'm not going to get banned from. Again, I got banned from Theta gang or whatever it was because they act like I was trying to sell a product. I just tell everybody, if you can learn to trade, then once you get the basics down, you can generate income and revenue and earn while you learn. And again, I do all the data, and you're paying for the data. How you execute the data, it's going to be based on your portfolio side and your skill set. Well, if you don't know if it works yet, get active on Reddit, ask questions, interact with people, get good at Reddit, and go make some money. And when you've made enough money that $99 is not going to hurt you because you've made $700 trading some of these ideas that you learn on Reddit, go invest $99 back in. I will promise you, I don't know, I've never met a single person that has not gotten $99 worth of education in their first month. Now, some people have said, well, I got more than $99 education, but I got frustrated. And that's going to happen. If you join and you think you're going to become an expert trader overnight, I got news. Trading is like a doctoral class. You get your PhD at the end of a couple years when you've proven consistency. Everybody on Twitter is all about the money. It ain't about money. How consistent can you be with MES, with MNQ, trading futures? With SPY, with QQQ, trading options? Or with individual tickers, trading shares? I can tell you all this right now. OPM is the options chain, and it tells us which options are overvalued and undervalued. Well, sometimes the market is run like this morning before the options are open. I can tell you right now, you could theoretically look at OPM, see which stocks are undervalued, and if the market starts running from a CPI print, guess which ones you buy? Guess which shares you buy in pre-market? The blue ones? The blue ones? Or if you want to hold the trade for more than a day, maybe you buy the red stock because then you can sell excessive premium and turn your shares into a covered call as soon as the market opens. And you know if the OPM is red from the previous night and we gap higher, how much more excessive premium is going to be put into those option premiums? A lot. There's a million ways to make money here, guys. Your job is not to be a jack of all trades and learn all million of them. Your job is to get good at one to where you can't miss. You practice it so many times, it is second nature to you. And then you start to expand out and say, okay, this is what I'm doing. What else can I trade that's going to be a complementary trade to this system? So I'm trading two strategies, and those strategies now are complementary, which means they're assisting me in mitigating risk to my portfolio. And you repeat that, and you repeat that, and you repeat that. That's what an OPM is. It's a tool that tells me if my PCSs are getting challenged tomorrow, guess what I'm going to do? I'm probably going to sell the red call options if tomorrow's red. If we start lower, because my PCSs are in the money. So when PVI starts getting challenged, y'all know I'm slinging the shit out of OPM trades and my personal account. And sometimes you'll make more money on the OPM trades than you saved on your credit spreads. That's okay. Money's money. But it's when guys don't understand leverage and they size up and then their portfolio gets way out of whack and you're out of balance. That's not good. Again, leaps 5 to 8% leverage or 5 to 8 times leverage. If you're trading a 25 delta leap, that's kind of the sweet spot for, I guess, Gen Z, Gen X, whoever you guys are. Poor man cover call. Again, we had our 5% drop. I didn't buy a single leap this week on this 5% drop from all-time high. And I usually buy it every time we drop 5% from all-time high. I usually start to build a leap portfolio. I didn't do it this time. And the reason why is going back to how many times January marks the high or the low of the year. And right now, January is still marking the high of the year. January 6th, Monday. When we go take out last Monday's high, it's too late to buy leaps. POTUS, I know it. I talked to Rick about it when I was doing it, and I do paste values only, and it still shows me there's a formula there, and there's no formula there. So I don't know. Again, I'm the guy that if there's a way to screw it up, I'm your guy. If somebody says, hey, I've got something and it's foolproof, let me have it. For a couple days, I'll fuck it up. That's how I roll. All right, guys. I am out. Anybody got any questions? Reddit, Twitter, or hit me up on ITG. All right, guys. Peace. Y'all be good. Good luck tomorrow. And